Hello, everyone. Thank you for attending this webinar this lunchtime. The webinar name is How to Use Your Self-Directed IRA and Leverage Your IRA with a Non-Recourse Lending to Increase Your Return. And thank you for attending again and for taking time out of your day, out of your lunch. And hopefully you can receive a lot of value on this perhaps 50-minute presentation. And and I have two esteemed presenter speaker. They are part of my network. They've been working with us for a number of years, and by being part of our membership, you are receiving. We always try to bring you some tremendous, great content and valuable information, so you could incorporate into your realistic plans. So you could take action and buy investment properties to achieve your financial goals. And let me share with you the logistics behind this webinar. My first presenter will be Brian Davis. He is from AccuPlan. He's one of the self-directed IRA custodian, present as well as he has a very unique program as well. It's a business trust with some LOC attached to it if necessary. So very sophisticated strategies. And then once Brian finished his presentation in about 20 minutes or so, then Jason Zook from North American Savings Bank will spend 20 minutes to discuss the non-recourse loans uh, that are leveraged through the self-directed IRA. So needless to say, we are, you know, the kind of strategies that we have are not really purview to the general public out there because most people are not aware you can use your IRA to buy investment real estate, let alone the great strategy of using non-recourse lending to leverage your IRA to buy more properties. So again, at the same time as I've been working with my investors over the years, I suspect my survey estimation indicates that around 25% of my members uh, have some sort of IRA in your portfolio, individual retirement accounts, typically investing in mutual funds. And although I've done my part as much as possible in the last few years, and I helped facilitated a number of my investors to use their self-directed IRA with a non-recourse loan to buy investment real estate. However, I feel there are still too many of you out there, including some in my membership, that still have not taken advantage of these unique strategies. So again, this webinar is another update for investors to really help you understand there is still a lot of value to use your convert your IRA to buy investment real estate. So without further ado, I'll have here Brian Davis gonna talk about self-directed IRAs. All right, Brian, take it.
All right. Thank you very much, Seewing, for the introduction. And yes, Brian Davis here with AccuPlan Benefit Services. You also might see some stuff about me with Retirement Checkbook. That is my checkbook IRA using a business trust that's focused primarily for California residents. But let's get going here. A little disclaimer before I do any type of presentation. I am not a financial advisor or broker dealer. I cannot recommend any type of investments. We're a platform for people that want to do their own investments and do their own due diligence. So please do your due diligence on your investments. And if using a self-directed IRA is what you want to use, we can definitely help you with that. So a little bit about me. That's a picture of me here, Brian Davis, Director of Business Development with AccuPlan. I got a couple websites there you can check out, AccuPlanCalifornia.com or IRAWithCheckbookControl.com or Solo401k.services for some of my different offerings with my phone number there as well. My background is I graduated from college at UC Santa Barbara back in 2001, got into doing residential real estate loans in 2002. Was doing that through 2007 when the economy kind of started hitting it on real estate stuff. Especially I was doing in a builder division with Wells Fargo Home Mortgage, and it all kind of went away first there. I got into doing self-directed IRAs in 2009. So I've been doing this for over 7 years. So I've been helping thousands of clients and tens of thousands of transactions of people investing IRA money in things outside of the stock market. And I'll get more into that and the specifics with real estate investments here to be more appropriate. But AccuPlan is the marketing arm. Our custodian is called American Estate and Trust. We're a trust company out of Las Vegas, which is what allows us to be an IRA custodian. So most people might not know that they can take retirement dollars and invest in things outside of the stock market. But the retirement plan rules that were written in the 70s under the ERISA code outlined that you just had to have a custodian that was able to hold certain investments, but they really didn't list too many things you can't invest in. So companies like us have come in to fill that void that the brokerage houses have left open of being able to hold some of these things outside of the stock market. So a lot of attorneys and CPAs, they might know a little, financial planners might know a little, because generally they're focused on traditional investments, stocks, bonds, mutual funds. So if you really are somebody that likes real estate or something outside of the stock market, a self-directed retirement plan, it could be right for you. So at the, a couple years ago, they were talking about what's in IRAs, and these numbers have gone up. There's supposed to be some new numbers coming up from the first quarter here any day now. But there were $7.2 trillion just in IRAs at the end of 2014. And that doesn't even include 401k plans and the like. I think if you included 401k plans, there's something around $25 trillion. But the majority of those funds are with brokerage firms, people invested in stocks, bonds, mutual funds. Less than 5% are in, the quote unquote alternative asset space, which is where we are. We're there to help people invest in things outside of the stock market. So going back to what I was saying earlier, these are the assets that we're seeing as the alternative assets. So investments in real estate, sometimes people do precious metals, private notes and loans are maybe the most popular investment item, and also investments in private companies. Sometimes people invest in partnerships or private stock corporations, and we can hold those types of investments as well. So you can invest in just about anything with an IRA, and here's a list of a few: raw land, lease options, water rights, livestock. This could go on and on and on. Like I said, going back to that ERISA law, they only outlined what you couldn't invest in with your IRA, not what you could. And they listed two main things: life insurance contracts and what the IRS deems as a collectible. And this is kind of a list of some of those different types of collectibles: a work of art, rugs or antiques, metals and gems, alcoholic beverages, anything federally illegal. And they even made some exceptions to certain precious metal coins back in the early 80s. Though it's not that simple. So there's also these things called prohibited transactions in your IRA. So besides those two things you can't invest in, there's also what's called prohibited transactions in your IRA. And this is very important to know before going into any type of investment with an IRA. So I'll try not to get too jargony on everybody here, but if anybody wants to look this up in the IRS tax code, it's in IRC, which stands for Internal Revenue Code 4975. And this outlines who's a disqualified person from investing with your IRA. So who can't receive any personal benefit? In other words, that would be yourself, your spouse, and then you want to kind of think of it in a straight line up and down. Your parents, your grandparents, your kids and their spouses, grandkids and their spouses can't have any personal benefit from your retirement account investment. So you can't buy a piece of real estate and that's in, where your kids might be going to college and rent it out to your kid, even at market value, because they would be seen upon as getting some type of advantage. So it really has to be an arm's length transaction. So we'll go into this a little bit here, because if you are found to be guilty of doing a prohibited transaction, the IRS can go in And as of January 1st of the year that prohibited transaction happened, they'll disqualify your whole IRA, which could have some big tax implications for you, plus fines for not paying that previously. So let's go into a quick little game here. Hopefully everybody remembers the game Deal or No Deal from now forever ago, back on NBC. But we'll do this in regards to prohibited transactions. So can your IRA lend yourself $10,000? Deal or no deal? That one's pretty simple. That one is, if I can get my PowerPoint to work, no deal. Okay, what about your brother? Can my IRA lend my brother $10,000? Deal or no deal? That one's a little trickier. That one's deal. The brother, sister, cousin, uncles, they don't fall in that straight line of up and down. Now, if you're lending your brother $10,000 and he goes and turns around and gets it back to you somehow, that would be considered prohibitive. So the IRS will try to follow any paper trail of what could potentially turn into a prohibited transaction. So you can't just skirt around, well, I'll give it to my brother and then he'll do this. So you got to make sure that it's for something else that the brother's doing. What about your stepson? $10,000 loan, deal or no deal? This one is deal. Your stepson doesn't follow in that straight line up and down. I don't make these rules, I just try to help interpret them for people. If it was your son, that would definitely be a no deal. But stepson, according to the IRS, is technically okay. Now, what about daughter-in-law? Your IRA lends your daughter-in-law $10,000. That one is no deal. Children and their spouses. So it can get a little confusing, and that's where I try to help come in with people when they have, different transactions. Hey, Brian, do you have any thoughts on this transaction? I can tell them, do I see a red flag or not? Next part of these self-directed IRAs. How do I put money in one of these self-directed IRAs? Well, self-directed is really a marketing term that our industry uses because we're allowing people to invest in what they want to hear. But we have the same type of IRAs that all the brokerage houses do. We have simple IRAs, SEP IRAs, traditional IRAs, and Roth IRAs. And there's really only 3 ways to put money into an IRA. Most common, somebody has an IRA somewhere else, and we do what's called a trustee-to-trustee transfer. So we request funds from your existing custodian, and we have them wired over to the IRA with us. There's no tax implications for doing so, and you can do that a limited amount of times per year. Then we do, let's say you have funds in an old 401k, we would do what's called a direct rollover, where once we open the IRA with us, you'd contact the plan administrator at that old employer plan and say, I want to request a direct rollover to my IRA, and they'll send the funds over to the IRA. But you want to make sure that you give them the information for your IRA, because if they send it to you, they'll take out 20%, and you don't want that to happen. I've only seen one 401k plan ever mess up on a client and do this. So don't do it. It's almost impossible to do, but I have seen it one time. And the third way is making an annual contribution. And I've finally updated this for 2017 limits, but they're very similar to 2016 except in a couple spots. Most people fall in the category of either having a traditional or Roth IRA. A traditional IRA is a pre-tax retirement plan, where a Roth IRA is an after-tax retirement plan. So most folks can put money away as a contribution to a traditional IRA. It's a tax write-off, and those funds grow tax deferred. You don't pay any taxes until you start taking funds out at retirement. A Roth IRA, you don't get the tax write-off when you put it in, but it grows tax-free. So when you pull funds out for retirement, there's no taxes taken out at that time. Most people, generally, they've built their retirement plans from some type of company 401k plan, and generally most of the funds in there are pre-tax, so you would roll those over to a traditional IRA. You can also convert to a Roth IRA, but you would pay taxes on that as earned income at that time. And then we start talking about the other types of plans for self-employed people. There's simple IRAs, which I rarely see. They're for small businesses, and it's similar to a 401k setup, but the contribution limits are much smaller. Most likely for the self-employed folks out there, I see one of 2 plans. I see the SEP IRA, and I see an individual K or a solo 401k. They work similarly, but there's some rules to the 401k that, especially when doing real estate investing with retirement dollars, is much more beneficial than an IRA. And I'll get into that in a second here. One of the things that especially a lot of Seewing clients do, and that's what Jason's going to talk about today, they're buying real estate with their IRA using leverage. So there is a loan involved, and somebody like Jason and from North American Savings Bank can help you with that loan. But sometimes all that loan, there's a lot of paperwork going back and forth with the transaction, and it can get very cumbersome if you're doing that directly through the IRA custodian. And so this is where the checkbook IRA comes in. And there's really been two prevailing methods, and one's been much more popular than the other, of people doing these checkbook IRAs with either an LLC or, more commonly for California at least, the business trust. They work very similarly, however, on the setup. So with the LLC model, your IRA becomes the sole member of an LLC, and you become an unpaid manager of that LLC. That gets you around the prohibited transaction rules, so that you can direct the custodian to invest the dollars into that LLC's bank account, which you would have access to go do the investing. And if it's just a one-member entity, like most of these are, there is no federal tax that has to be filed because it's considered a pass-through or disregarded entity since it's one member. The big caveat to this, though, is for folks in California. California has a large franchise tax of $800 a year, and I've heard some murmurs that that might be $900 now, but I think it's $800 still. But there's also something called a gross receipts tax. So if you have gross receipts of over $250,000, it's going to be even more per month. So that's what's led a lot of my California clients to look for other entity structures. And the one that I prefer the most is by using a business trust. And I call mine a retirement checkbook. And you can look at my website at retirementcheckbook.com. But it works very similar to the LLC model. Your IRA is the trustor, grantor, and the beneficiary of the trust. You, the IRA owner, are the trustee. So very similar setup to the LLC and the trust. The big difference here is on the state side. The trusts follow federal guidelines. So if it's a pass-through entity federally, just like if there's a single member, just like most of these are, then it's also a pass-through when on the state side. So they don't have to worry about paying the franchise tax board fees or paying that gross receipt tax, or even worry about having to file any type of return at all. So that's the benefit there. And if you want more info, check out my website on those products. But we make it pretty simple on the IRA side to open. We open up an IRA online. It takes a matter of minutes. We work on funding the account, just as we discussed in one of those three ways. People have an investment. So let's say you find a property in Texas or Florida through Seewing. You're going to make the offer either in the name of the IRA or in the name of the checkbook IRA that you create, so trust or LLC, and then we'll fund whichever one of those investments you do, and then you can purchase that in your retirement account. So you're actually buying the real estate in your retirement plan. You're not taking money out as a distribution and then buying it. That's where people get a little confused, I think. But I want to go back to what I was talking a little bit about before, the solo 401k. Now, this is for the self-employed individual that doesn't have any full-time W-2 employees. So a lot of times, you know, real estate brokers or doctors or dentists, they're self-employed and they might not have any full-time W-2 employees. So the IRS has this 401k plan for you when you're self-employed that you can create, and you can make contributions to it a lot easier than an IRA and a lot larger. You can get up to potentially $54,000 a year or $60,000 if you're over the age of 50. And if your spouse is part of your business, you could potentially each be putting that much away. One of the huge benefits here, and I'll see if my slide shows it, but this is just going to show the setup. What we do is we create the 401k plan for your self-employed business, whether you're sole proprietor, you're incorporated or LLC, what have you. We can create your own 401k plan. You can roll over retirement dollars into the plan just as with the IRA, and then you can purchase property directly into the 401k plan. You're the trustee of the plan, you're the administrator of the plan, you wear all the hats. So you're off and running. This plan, the solo 401k, comes with checkbook control. One of the main things here I always like to point out, especially since we have Jason on the line, is if you're getting a non-recourse loan with your retirement plan to purchase real estate. If you do so in an IRA, there's a tax associated to your earnings in the IRA based off the percentage of debt financing you use. And that's under a tax law called unrelated business income tax. And there's actually a subset of that called unrelated debt financed income, basically saying the percentage of debt financing, there's a tax associated to it, but it gets a little complex. You really need the help of a CPA, and Seewing's got a great one on his team to help people with that calculation. The 401k plan, however, is exempt from that unrelated debt financed income tax. So if you're using leverage and you're buying real estate and you fit the model to have one of these solo 401ks, it's much more advantageous, especially when using leverage in the account. So we have this product. I generally help people set it up with as a one-time fee for setup, and then they're off and running with it. And I show them how they can open up a bank account at their bank for it, or even a brokerage house like Fidelity and Schwab. But we could go into that with more details. I have a special site for that called solo401k.services. But we create that 401k plan from you, talk to you about how you roll over the cash and assets in that, and you can invest directly in there. So you can do a lot of different things with the 401k, including loaning yourself money. You can loan yourself up to $50,000 as the plan participant, just like if you worked for a big company and wanted to take a loan from your 401k. But again, we can go more into that for details. Check out my websites here, activeplan.california.com, the IRA with checkbookcontrol.com, and the solo401k.services. I also have my office line there, 619-432-4555. That's pretty much my portion of the presentation today. If anybody has any questions, please feel free to reach out to me directly. And Seewing, I will turn it back over to you.
Thank you very much. Thank you for your time, Brian. Great presentation. And of course, for those of you that wish to convert your IRA to a self-directed IRA, you may contact Brian Davis, or you may contact me so we could, so I can consult with you a little bit to go over your overall financial plan. Thank you, Brian. So look forward to continue to do business with you. You have some great basic and advanced strategies, and thank you for the education. And look forward to continue to work with you. So as I segue into Jason, I'm going to change the presenter to Jason as a panelist. So Jason, you should have control of the menu, and then you could open up your PowerPoint. You can pretty much begin. Jason, are you there?
Oh, I am. Can you hear me now?
Yes, I can.
All right, perfect. Yeah, hi. As Seewing mentioned, I am Jason Zook, and I am with North American Savings Bank, and we are a federal bank located out of the Midwest that supplies non-recourse loans nationwide. We have done so for the last dozen years, and we actually wrote the book on it, and can answer about any question that you would come up with looking for non-recourse financing. So we're also at IRAlending.com. Here is my information there.
Jason, I do not see your PowerPoint. Are you showing on your screen, on your desktop?
It is showing here. I show it as full. Let me go ahead and push start and see if that'll do it. Is it there now?
For some reason, I don't see it. Okay,
I pushed.
Okay, we're good.
Okay, perfect. And here it is. And here's the information that I talked about with our bank, my contact information on the first slide. And so we'll move on now. All right, we will go over some items such as what are the advantages of using debt financing to buy the real estate within that IRA account, how you as a consumer can obtain a non-recourse loan to buy real estate in the account, and also what some of the guidelines and parameters are for non-recourse loans. As I mentioned, we did also write a book on this. I'm happy to send you a copy via email as well if you'd ever like to take a look at that. Now let's assume that you are purchasing a property in Texas or Florida. I know there's some single family homes in Florida that we were looking at. We're also going to look at some duplex and fourplexes in Texas, and we'll help you with what next steps to take for the non-recourse portion. What is a non-recourse loan? A non-recourse loan is one that you are not personally liable for repayment of the loan. There is no recourse against you. There's no recourse against the IRA, only the property itself. So because of that, a bank such as ours is going to look at the property to qualify, and the security instrument has non-recourse loan language in it to make sure that you don't have to ever be personally responsible for that. In the event of default or foreclosure, the only thing the lender can do is take the asset back, but it would not affect you personally going forward. In Publication 590, it is an IRS manual, and it states that you cannot use the IRA as security for a loan. And that is how the non-recourse loan was invented. As I mentioned, there's no recourse against you, no recourse against the IRA, only the property itself. The Publication 590 states this, that you cannot use your IRA as collateral. So that only leaves the one option. And most banks don't offer this type of loan. As I mentioned, we do and have been around since 1927. We're federally insured, based out of the Kansas City area with over $1.5 billion in assets. We offer plenty other types of loans along with these. This is a small part of what we do, but the only thing that I do and have done for the last dozen years. So what are some of the advantages of using debt financing within a self-directed IRA? All proceeds go back into the IRA. If you have a Roth IRA, then you've already been taxed on that money, so you're not going to be taxed again on that. If it is a traditional account, then it can build a tax-free until the time you are ready to retire. This allows for larger gains in your retirement account by being able to shield it in these accounts, such as Brian talked about. So who is eligible for obtaining a non-recourse loan, the IRA? Basically, anybody who has at least 30 to 40% of the purchase price in your retirement account has the opportunity to buy rental property using a non-recourse loan. You can buy single-family homes, duplexes, 4 units, condominiums, multifamily. There's plenty of different options that you can put in your retirement account. You'll want to make sure that the purchase contract, title work, insurance, and any other related documents are in the name of the IRA, or as Brian mentioned, there's also a checkbook IRA. The good thing about this is you don't have to worry a whole lot about this because we work with your real estate agent, your title company, your insurance company. We'll make sure everything is set up correctly. Even if it's not up front, we'll make sure and get the correct amendments later to get that done for you. We can currently finance properties in all 50 states. So if you live in California, but you want to buy a home in Texas or Florida, you can use our services, Brian's services. We can put everything together and make it happen for you. The processing time frame for a non-recourse loan is about 30 to 35 days in order to fund. If you find a property tomorrow through Seewing that you are interested in, we can get a loan decision and approval for you within a couple of hours. Show you a cost spreadsheet to make sure it makes sense to you, and if it does, get the paperwork started and close in 30 to 35 days. That's pretty standard across the board for even out in the conventional financing world, so we have it down pretty good. Here are the types of loan programs available for non-recourse financing. We offer a 5 and a 10-year ARM, or a 10, 15, or 20-year fixed option. Now, if you choose a 5 or 10-year ARM, we can amortize those sometimes out up to 25 years. So that will allow for your payment to be significantly reduced and help for your cash flow right up front. These are all principal and interest payments. Unfortunately, we don't have any other interest-only options or home equity lines of credit. There are a few more stringent rules that we have for these types of loans. Our minimum loan size is $50,000. And if you remember, we typically want to see about 30 to 40% down. So we do have that minimum purchase price at about 80 to 85,000 in order for us to take a look at the home. If you already own a home in your IRA, or let's say you find a home that you like, and in order to get such a good deal on it, they need you to close quickly. If you have enough money in the account to buy the house up front, we can come back after the fact and offer a cash out loan to the IRA. The terms are the same that way. We'll go through an appraisal process, a 30 to 35-day closing period, and then just deposit the funds back into your account so you can do with what you would like. Many times people will do this and use those loan proceeds as a down payment for another property. So now you're able to purchase two properties. This is also some of the properties we talked about that are eligible. I won't go through that again for you. Here are some ineligible ones. For us as a bank, we're looking more for metropolitan type areas, homes that if we had to take back, we could get rid of easily. So more main single-family townhome, condo, multi-unit in metropolitan areas. However, we'll take a look at anything that you have or try to refer you out to the best company that can help you. The income requirements for the rental property, for us, we're going to look at the property's expected cash flow. We typically want to see that the income on the property exceeds the debt and expenses by about 20% on single-family homes and 25% for attached properties. So once you're bringing in that 30 to 40% down, we'll look at what's left for the mortgage payment and the other expenses and make sure there's a positive cash flow there for you so the property can stand on its own in case it does go through other periods of not having a tenant. At least you'll know what the market rents are on the property, and we'll try to make sure to help you with that as well. We're going to go through an example. This is a single-family home. Let's say you find a nice single-family home, Central Florida, through Seewing, $880,000 property, gaining $1,600 a month in rental income. Here's some expected expenses. If you have some vacancy, in our calculations, we use 7% of the annual income as vacancy. If you don't have vacancy, great, just more actual cash flow for you. Expected taxes on a home like this in the $1,500 range. Insurance $720. Maintenance per year, we use an estimated $420. Once again, if you have this newer home, you may not have much maintenance at all. Better cash flow for you. For us, we use a management fee of 6%. Now, this is assuming that you hire a property manager. So if you have a property manager and you're paying them to manage the property, we're using this in our figures. So if you're gaining $1,600 a month in rental income and you subtract these expected expenses, that leaves you a net operating income of $14,000 plus. If you take that net operating income and subtract then the principal and interest from the loan, and this is based off of that $108,000 loan, which is a 60% loan, using an interest rate of 5.25%, we show that it comes up with a 1.61 debt service coverage ratio. So what that means is 1.0 would be break even. If your income and expenses offsetted, it would be 1.0 DSCR. Using the figures that we did, we're showing it's a positive 61% cash flow. Now, we may be able to get you a little bit higher loan as well. Maybe we can get 35% down. There are other interest rates and loan products that you can use as well, and I'd be happy to go over those at any time. Here are some of the fees associated with this. Over the years, these have really gone down. We charge 1% of the loan amount as a fee, and then $695 total in processing and underwriting. Now, if you start a loan process with us, the only fee we collect up front is just the appraisal. If you cancel at any time, that's the only money that you're out. You don't owe us a dime. At closing is when the 1% plus $695 would come out. And then we do also impound for taxes and insurance. Some documentation that we would require for loan approval. A loan application, which is very simple since we're not verifying your income, assets, or employment. We're only going to get the basic necessity that we need in order to start the loan. We'll want to see a copy of your statements, the purchase contract, driver's license, and some custodian documentation as well. If you use a checkbook IRA, then we'll ask for some LLC documents, but that's something once again that we can help you with. They're all very easy items to obtain. We also have a podcast on our IRA lending website. It's at iralending.com. And here's a copy of that book as well. I mentioned if you would ever like a copy via email, I'd be happy to forward you over one. If I can answer any other questions, let me know. My name is Jason Zook, and I am with North American Savings Bank. Thanks, Seewing. Thanks, Brian.
Thank you. Thank you so much, Jason, for the presentation. You may leave now, but I'm going to continue for a couple of more minutes to talk to my members. Thank you so much. And you know where to find Jason and Brian. By the way, Jason Zook and Brian Davis, their contact information is also embedded on my website, www.seewingyeeseminars.com. So anyway, this video is being recorded, so you will have access to it. I know some of the information that you receive so far on this webinar may sound foreign to some of you, and to some of you, you may need to, once you receive the video replay, it might behoove you to listen to it one more time or even more than once again so you can really digest what really transpire on this presentation. So again, you know, non-recourse lending, especially with Jason Zook and his company, North American Savings Bank, is a very niche loan product. You're not going to find non-recourse lending that are leveraged through the self-directed IRA anywhere else in the country. As a matter of fact, I do not believe any other lenders in the U.S. are doing non-recourse lending in a way that Jason Zook's company is doing. So, because you're a member of my organization, you have the purview, you have the benefit of you know, for my team, the specialized team that that understand the specifics of our investors. So here's the potential action plan for my members, whether you are watching this webinar or not. So the potential, here's a recap. The potential action plan would be, first, go over your financial goals and objectives. In fact, go over it with me, ideally, right? Create a relationship with me, just like anything else with my members. Then, based on your financial resources, based on your available IRAs, find your criteria. What kind of property you want to purchase, which neighborhood, which area. Of course, we're promoting Florida and Texas mainly for right now. So you want a single family home? What are the purchase price you want to purchase? You want a duplex, a triplex, a fourplex? And what are the price point, right? And then look at your IRA retirement plan portfolio. What I want to make one distinction that Brian did not talk about on this presentation. The only accounts you cannot roll over is your current employer 401k plan, all right? So unless you quit the company, then later on you can roll that previous employer 401k into an IRA, hopefully into a self-directed IRA, to use the IRA to buy real estate. All right. Otherwise, look at your IRA portfolio, whether you have some IRA left over from a previous employer 401k, or whether you have a regular IRA that you on an annual basis investing like $4 or $5 grand per year. Look at your Schwab account, IRA, or Fidelity, or Dreyfus, whatever mutual fund portfolio. If you're not happy with the rate of return, I suspect many of you are not happy with your mutual fund Wall Street portfolio IRAs, and then roll over those IRA into a self-directed IRA custodialship with Brian Davis. And it'll only take about 1 to 2 weeks to roll the money over. Very easy paperwork. Brian can guide you along with that. Then understand that you can put down 30, 35, 40% of your IRA. So once you roll the money over into a self-directed IRA or into a business trust or into a checkbook control LLC with Brian Davis, once you accomplish this task, and then you identify the property you're going to purchase, hopefully through our network, through our partners, Gene Gillum in Florida, or Sean Little in Texas, or Ken Renner in Austin, or Kevin Clark in San Antonio. These are my partners. So yeah, then once you roll the money into your self-directed IRA, then when you open up escrow to buy the property that you want to buy through our network, then Jason Zook and his North uh, uh, non-recourse lending, the leverage from the IRA will come into the picture. So you can submit the paperwork through Jason Zook in conjunction with Brian Davis. I know the paperwork can be overwhelming. I kid you not. You have to be very focused when you do the paperwork online. You scan the paperwork back and forth. When you go through the transaction itself, the timeline to close escrow, which are self-directed IRA and your non-recourse lending, the paperwork can be overwhelming. I get that, but do your best. Try to get over it and try to show discipline and have a positive attitude. It may take you 45, even 2 months to close escrow because there's so much paperwork. But it is what it is. This is how the process works. So if you're committed, if you're focused, if you don't mind all the paperwork back and forth that you have to submit and all that stuff, is worth it, right? Because the money in your IRA, the cash flow that you accumulate is tax deferral, right? That means you don't pay taxes on the gains of the monthly or annual cash flow. You don't pay taxes on the appreciation of your asset, of your property that you purchase under the self-directed IRA until you retire at 59 and a half of age. Then you could have the option of liquidating the cash flow from the IRA at that time at a tax bracket that are based on your tax bracket at the age of retirement, age 59 and a half. Although you do not have to liquidate your cash flow at age 59 and a half if you do not want to, but you can keep the money for a long time until age 70 and a half for most of you, where then you may be subject to a RMD, required minimum distribution, right? But and, at that time, the IRS want to force you to liquidate your IRAs at age 70 and a half because they want their chunk of the taxes. But I don't want to dwell too much on the tax areas because you have to consult my certified public accountant, Lorraine Evans. She's also listed on my website, her contact information. All right, so basically you need to work as a team, right? You ideally work with me as your high-level real estate wealth advisor. Then, through my recommendation and guidance, then with the IRAs, I can put you in touch with Brian Davis to initiate the initial paperwork. Then shortly thereafter, do the non-recourse loan paperwork with with Jason Zook, and then you should have a very good process. All right, thank you so much for attending. I know we're reaching the top of the hour. We're not going to have time for Q&A because Brian and Jason they just exited the webinar. So you have their contact information. So again, thank you for attending. I know you guys are very, very busy. This is a very important webinar, I believe, and a lot of people have not taken advantage of their existing traditional IRA in their portfolio and other previous employer 401k. You just leave it at your previous employer. It's not a good thing, right? So you can earn a lot more return by using your IRA to buy real estate investment, and with the leverage of the non-recourse lending, your return will be even higher, tax-free. Think about that, right? Okay, a lot of you are high-income individuals living in a Silicon Valley Bay Area, and you're tired of paying so much taxes. But now is a way to buy great investment properties in Florida and Texas through our network, and then making your money earn double-digit tax deferral. Okay, thank you for attending. Hopefully this seminar is prove valuable to you, and we can have a recording video I will send out in the next few days. And thank you for attending so much, and have a nice day. This is Seewing Yee from the Yee Real Estate Network. Have a nice day. Goodbye.